All right, boys and girls. Let's 1 second. Let's take a look. We're going to break down this TIGR trade. Up FinTech, I guess it's called. I just call it TIGR, TIGR. There's some Chinese financial something or other. The Robin Hood of China, let's call it. This one moves with Futu pretty consistently. Futu is also a good trade. I kind of wish I would have taken that instead of TIGR, but TIGR played a lot cleaner. Excuse me. So anyways, here it is. This one was trending all day. All the Chinas were moving pretty heavily, gapping up. As you can see here, going pretty hard. JD, there's much Billy. Boom, right there. So China's were on watch pretty much from the get-go. Never really gave an entry here. They were just straight up. You could have taken this little flag breakout as it flagged up here, taken on the breakout. That would have worked, ran it up to here. But those haven't been working for me as much lately. So I'm going back to what I believe is my go-to setup and what I'm most comfortable with doing. So I'm just going to break it down a little bit here for you. This orange line right here is the VWAP, volume weighted average price. It's a key indicator. It's where the average price, combined with volume, is a really solid indicator of where the supply and demand really is, where the most people are sitting on this right now. Anyways, as you can see, it trended up from 1350s, went red to green right away, or no, that was last night. Opened up green right away, pretty powerful move, and gets a little exhausted right up here, and this is midday. This is, right around lunchtime, right around 10:30 a.m. And right around this afternoon time, you see so many of these charts pull into the VWAP. And so what we're looking for is, first off, orderly pull into the VWAP. I don't have volume on here, but it was a low volume pullback into the VWAP. I loved that. I love low volume pullbacks into the VWAP and after higher volume in the morning. So we saw it right on the VWAP. I saw it hold and I saw a bunch of volume come in. I immediately market bought right here. I've got 1456 as a line. I think I got a little bit. I think I got 1460 on it, 1459 actually. And we're risking right below this candle, just a little bit below the VWAP, right where it came in. So right away we're risking, in the ideal scenario, 6 cents. I think I was risking 9 cents at the time. And so if you got 1,000 shares and you're risking 6 cents or 9 cents, that's $60 or $90 on 1,000 shares. So the risk is pretty awesome on all these setups. Very low risk, and as you can see, very high reward. Right away, remounts to 9. I'm super happy. Keeps going up. Gets a little extended here. This candle kind of frightened me a little bit, but it comes back right into the moving averages. Holds again. Holds, goes sideways a little bit, and then we get this another strong candle going above. So we immediately added to our position right up here, right when it crossed over this red candle. I'm gonna pull it this way for a second. So right here, once it held this bottom and this green candle went over the high of that candle, I immediately bought some more. 1470, I've got marked out. I think I got 1472. So that's a 13-cent difference. I doubled my position, so that's 13 cents. So we're sitting at 1466, let's say. It goes 1465 and a half. So we're sitting pretty good. And then since I average in, since I bought more, I moved the stop right below this candle right here, 1473. So now we're only risking 3.5 cents on our second average. Now we have a full size position on us, and we're risking 3.5 cents at this point. And from here on out, some people like to sell into these pops, like sell some right here, sell some more up here, sell some more up here, and then be all out. That probably would have been better, but I wasn't exactly sure how this worked. And I personally just like trailing things up, because I often get a little too giddy and start selling pretty early, on like maybe sell on this one and then this one and then on this one, and then I missed this whole rest of the move. So what I did here, I trailed it up and just kept trailing it up. So after this, candle held the 9 EMA that I've got circled right here. I'll move this so you can see it a little bit better. There's a 9 EMA, just going right up. Trailed it to the below the bottom of that candle right there for 1486, guaranteeing ourselves 14-cent win on the trade. I know it's not that much, but if you can get some time, if you're risking 6-9 cents at this point, we're risking 3.5 cents. You can get 500, 1,000, 2,000 shares of this and only be risking about $100 at most. So right away, we guaranteed ourselves a win, stop at 1486 with a 1473 average price, or sorry, 1463 average price. And then I just basically did the same thing right here. Right here, this candle held, went back up, moved the stop up a little bit higher to 1490. Almost got stopped out here, but it held the 20 EMA, remounted right there. Boom, this nice candle brought the stop right below that. Very strongly considered selling up here in the 1508, 1510 range. Just as I saw I was getting a little extended from the 9 EMA. Hindsight, obviously wish I would have. I had a couple opportunities to sell as it broke the 9 EMA, but it held the 20 right here and remounted the 9. So I was getting pretty excited that we were going to get up here and see, the 1550s or something. And then, this reverse hammer candle happened, and then boom, broke below the 20 EMA. And we ended up getting stopped out at 1498. I think I got 1497 on it. So that's a 34-cent win on this trade. And just in the middle of the afternoon, we were only risking at the max point, I was risking 9 cents on it. But ideally, if you would have gotten the perfect entry at 1456, you would have been risking, $60, 6 cents per share. So pretty awesome trade here today. Another thing I want to go over is the macro market at this time. And so at this time, the IWM was basically doing the same thing, but just not to the view app. It was coming back and holding and remounting and going. So that gave me a little bit of confirmation that we'd get some follow through here. Q's sitting in this tight range here all day. Haven't really paid attention to those very much today. SPY wasn't in this tight range. Got a little tighter right here. And we saw a nice little breakout and push and SPY up there. Dow, who cares about the Dow? Hey, look at that little push. Oh yeah, what's running? Take a look at cat. I like cat. I'm thinking about entering a swing position here. And this, let me go to this one here. Okay. Yeah, oh no, it's breaking down, never mind. Yeah, I was watching this level right here on this. I think it's an hourly. Yeah, yesterday was forming a pretty nice. Another one, maybe right here-ish, I don't know, whatever. But as you can see, it broke down there, so the entry's not anywhere. But I will keep it on watch. I love how tight the 20 SMA and the 200 are. One of my favorite swing setups. Yeah, going back to this TIGR. I like to trade on 2 minutes and 5 minutes. A little crazy. Quite honestly, it kind of given another entry right here. You could have got back in about 15s. As you can see, it's not working. We would have stopped out right here, break even. So save yourself some time and stress. And also important with this trade, let's go to my main one. Important with this trade too, which when we were in it, I actually wasn't really paying attention to. I kind of noticed it. I gotta sneeze. Bless me. Thank you. Right, and this too, right where it got rejected and pulled back, right at the 20 SMA on the daily. So not surprised, but we are making a higher high. Let's see if we can come back, big high low and see what this thing can do for the future. If China's are indeed bottoming, there are some wonderful opportunities out there. For me, there's still no touch, but look at this. Higher low, boom, big breakout over the high. Beautiful, love that chart. Baidu, this thing was just kind of hanging on this range, breaking out. See how it reacts to the 50-day moving average. Still has a lot of work to do, man. This is just a nasty downtrend. Baba, pretty much same thing, pretty much no man's land. Baba, I kind of got screwed on earlier. I was watching this 200-week moving average. Kind of saw it sitting there, kind of took an anticipatory stab at it. I actually got a really good entry on. I got 198 right at the bottom here. Pitched out, took some profits at like 207, 205. I think I actually sold that. Luckily I did. It went down to 150s. That was a while ago though. What else we got? JD. JD looks nice. Filling here at the 200-day moving average. If we can really get above this and break this, 80, 86 range, I'd love that back into the hundreds. Got a bunch of upgrades too, killer earnings. What else we got? Billy. Yeah, these charts are just no man's land. No touch for me for now. All PDD. PDD is probably my favorite one to trade during the day besides Futu and TIGR. And look at this. Look at that. Beautiful. This is actually pretty nice. This little trend line break on the daily, came back, tested it. Yesterday, formed a hammer candle, kind of rejected at the 50-day, and then boom, today just powers right through it. Sort of been a pretty killer swing if you would have taken it off the 9 yesterday on Monday. So yeah, that is the recap of my trade today on TIGR. That's all I got for you. This is so far the first video of the TSDR YouTube or TSDR trading YouTube channel. TSDR is tell, show, do, review. It's a big push that we like to do is now that we're starting it. Armand and I were big into reviewing our trades, going over them, thinking about how we could have done them better. So actually I marked out these levels when I was saying, I wish I would have gotten this price. I wish I would have gotten this price. But in actuality, I got a little 3-4 cents above it, 3-4 cents above it. And how I could have sold into these spikes a little bit more. Because we're constantly reviewing these trades because, a couple pennies here, a couple pennies there, on a bigger stock, $100 stock and 50 cents, $1 there, makes a big difference in your wins and losses. So that's a review aspect. That's why I went with the tell, show, do, review. So I'm telling you, I'm showing you how you get to do it, and we'll review it together. All right.